That intense, almost uncontrollable feeling hits. You check your phone. The S&P 500 just hit another all-time high. And you feel two cravings at once, right? First is the craving of FOMO. I'm missing out. The market is leaving without me. I have to buy. But the second, stronger feeling is the craving for safety. It's the fear that you'll be the greater fool, the one who buys at the exact top, just before the crash. This paralysis is miserable. So you search for answers, and every guru gives you the same willpower advice. Don't time the market, just dollar cost average. Time in the market, not timing. What if I told you that advice is a lie? Not because it's wrong, but because it's dangerously incomplete. It's a follower's blueprint. Today, we decode the all-time high. It's not one message. It's 5 separate, coded signals, and one of them is screaming danger. Stay with me because understanding the signal that 99% of investors miss is the key to designing your freedom. Welcome to Wealth Architect. Welcome to the podcast where we don't just follow the rules, we design the blueprints. I'm Ben, and I'm back with Dr. Marcus Thorne, our resident economic historian. Marcus, this is the #1 question everyone is asking. Should I buy index funds now? It feels like the most dangerous time to invest.
It feels that way, Ben, and it's a perfectly rational fear. The dollar cost average advice is given as a willpower solution to overcome your fear, but it's passive. It's hope. An architect is never passive. An architect deconstructs the problem. That all-time high isn't one thing. It's a complex signal. And for too long, we've been told not to time the market, but we've never been taught how to read the market.
So instead of white-knuckling it and just blindly buying, we should be asking, okay, all-time high, what are you really trying to tell me?
Precisely. That shift in perspective is the first step. Fighting your fear is useless. Understanding the data behind the fear is where the power is. We are going to decode the 5 signals hidden inside this all-time high, because one of them is a sugar high of euphoria, but another, as we'll see, is a signal of pure strength.
A contradiction. Okay, I'm ready to get the real blueprint. What is the first coded signal?
Let's decode the 5 signals, starting with the one that feels the scariest. Signal number 1, the valuation signal, the sugar high warning.
This is the one that fuels the crash craving. The market feels expensive.
It doesn't just feel expensive. It is expensive. This is the gut health check. When we look at the Shiller PE ratio, which compares stock prices to average earnings over 10 years, we are at a level higher than 1929, higher than 2007. We are just shy of the 2000 dot-com bubble. The coded message here is not the market is growing, it's the market is on a sugar high of pure euphoria. The price has become dangerously disconnected from the actual earnings. This signal is screaming danger. Signal number 2, the concentration signal, the nutrient gap.
We've talked about this. This all-time high isn't even real for most stocks, is it?
It's not. This is the nutrient gap in the market's diet. You think you're buying a diversified index fund of 500 companies. You are not. You are buying 7 massive tech stocks and 493 other companies that are just along for the ride. The S&P 500, SPY, is at an all-time high. But the equal weight S&P 500, RSP, which holds all 500 companies in equal 0.2% slices, is lagging far behind. The coded message here is, you are not buying the market. You are buying the Magnificent 7 bubble. This confirms signal 1. It's a concentrated euphoric sugar high.
Okay, so 2 signals are screaming sell. This feels easy.
But now we decode the other side. Signal number 3, the historical data signal, the strength code. This is the one that fights your craving to wait. What actually happens when you buy at an all-time high? The data is shocking. Studies show that if you invested in the S&P 500 only on days it hit an all-time high, your returns over the next 1, 3, and 5 years were better than buying on any random day.
How is that possible? That's the opposite of buy low, sell high.
Because buy low is a follower's platitude. The real blueprint is momentum. Strength begets strength. An all-time high isn't just a price. It's a signal that the economy is strong, earnings are good, and optimism is high. The coded message is, the trend is your friend. All-time highs are bullish, not bearish.
So now we're paralyzed again. Signals 1 and 2 say crash. Signal 3 says buy.
Exactly. This is the contradiction. This leads to signal number 4, the DCA fallacy, the willpower lie. The gurus tell you to dollar cost average to solve this paralysis, but blindly buying the S&P 500 SPY right now means you are only dollar cost averaging into the 7 most expensive sugar high stocks. Signal 2. The coded message is, just DCA is a broken blueprint in a concentrated market. It forces you to buy more of what is most expensive. It is the opposite of buy low.
So what do we do if DCA is broken and waiting is wrong and buying is dangerous?
We decode the final, most important signal. Signal number 5, the asymmetry signal, the architect's blueprint. This is the Buffett-Burry move. The architect does not choose all in or all out. The architect manages risk. The real blueprint is to split your strategy. You respect the momentum, signal number 3, with your core investments, like a 401k. You respect the valuation, signal number 1, with your new cash. The coded message is, don't just DCA, build an opportunity fund. You participate in the market, but you build a cash fortress, like Buffett, and get paid 5% in T-bills to wait for the inevitable crash in the sugar high stocks. That is the asymmetric, can't lose blueprint.
Okay, Marcus, this is the first time this has ever made sense. The paralysis comes from treating 5 different signals as one. So let's build the new blueprint. The follower just keeps blindly buying SPY. What does the architect do starting today?
The core principle is to work with the signals, not fight them. You have to design your portfolio to respect both the momentum and the valuation risk. 1. The core and explore blueprint. Hydrate first. Don't panic sell your 401k. That is your core. Let it ride the momentum, signal number 3. That's your hydration. But all new money from your paycheck goes into the explore bucket. 2. The Buffett blueprint. Build the opportunity fund. Your explore bucket is your new opportunity fund. Instead of putting new money into the sugar high stocks, SPY, you put it into cash, T-bills, high yield savings. You are literally getting paid a 5% risk-free return to wait for the valuation, signal number 1, to crash. This is your asymmetric bet. 3. The smart DCA blueprint. Find protein. But what if you must buy stocks? You're craving the investment. Do not buy SPY. You buy the equal weight index, RSP. This is the true healthy swap. You are selling the 7 sugar high stocks and buying the 493 protein stocks that are not at all-time highs. This is the true buy low strategy. 4. The system compassion mindset. When the market goes up another 10% and your opportunity fund is in cash, you do not say, I failed. You say, my system is working. I am sacrificing a small 10% gain to protect myself from a 40% crash, and I am prepared to buy that crash. You have de-risked your life.
This is a design for all weather. We respect the trend with our core, but we prepare for the crash with our new cash. This is the first time I felt zero paralysis about an all-time high.
That is the difference between following and designing. So, the 5 coded messages inside an all-time high. The valuation signal. Danger, this is a sugar high bubble. The concentration signal. Danger, you are only buying 7 expensive stocks. The historical signal. Buy, strength begets strength, the trend is your friend. the DCA fallacy signal. Stop. Blindly buying now forces you to buy high. The asymmetric signal. Design. Build a core to ride the trend and an opportunity fund to buy the crash.
It's not about if you should buy, it's about how you should buy. You are not a timer, you are an architect. This changes everything.
Excellent. Now for the architects listening. What is your current blueprint? Are you blindly buying index funds, or have you started to build your opportunity fund like Buffett, or switch to equal weight like an architect? Share your strategy in the comments.
And if you're ready to stop panicking at all-time highs and start designing your asymmetric freedom, hit that like button, subscribe to Wealth Architect, and share this video with anyone who feels paralyzed by this market. Now, for the next episode hook, we've decided what and how to buy. Next week, we're decoding when to buy the dip. We are deconstructing the 3 canary in the coal mine signals that always appear just before a major crash. You won't want to miss that blueprint. Thank you for tuning in.